Per usual, every channel is for educational purposes only and is not intended as financial advice. Teaching Tech Tuesday. I'm getting a lot of questions from people about basically what it comes down to is how to trade the breakout. This goes back to having a plan for weeks, for months. This is the whole reason we do any of this stuff, is to think about where could this go and think about the future and think about what we want to be doing, when we want to be doing it, and what we want to be using well in advance, so that when it happens, like it is now, we're just sort of on autopilot, right? We're just doing what we spent time thinking about, in this case, for months. I wanted to review a few quick things, and I'll go on to the how I'm thinking about price action here. But as a reminder, I can't hit this home enough. Allocation buckets are key to success, because the last thing you want to be doing is adjusting your entire stack with every single trading decision. You absolutely do not want to use some hourly chart to decide what your long-term cycle viewpoint stack is going to be. And if your capital is not broad enough, wide enough, deep enough, big enough for multiple buckets, that's okay. Just size everything down, and the odds are you probably need to be doing less. That's really what it comes down to. The percentages for people in each of these buckets is going to vary. Some people don't like having a cash bucket at all. Some people don't trade leverage at all. Some people trade on different types of exchanges. Some people trade legacy and then crypto native exchanges like Kraken. That's all up to you. But it's important to have that all ready to go ahead of time and understand, on this exchange, I'm doing this. That's what this strategy is for. Or on this account, this is what that's for. This other account over here, that's for learning how to trade options and losing money. Okay, whatever. But this other stack, we're not going to do that with this other stack. This other stack is long-term viewpoint. What I see people doing already is mixing everything together, panicking, thinking like they need to be all in, they need to be all out. That's not how this works, right? So separate like a dolphin. They sleep half of the brain sleeps at a time. Separate your strategies here. Use your corpus callosum and separate your hemispheres. Separate your buckets. If you haven't done that already, highly recommend. Really makes your life easy. For me, it's much easier to partition this stuff than to think about the entirety of the stack every time, every move, and then think about it in percentage terms, because I can see, for some people especially, they just can't. They're breaking down already. We've not even hit an all-time high yet, and people are just freaking out. The percentage terms help with unit sizing. It helps with the reality of taking this out of dollars, basically, and putting it into something else. And it goes without saying, but write this down, right? For some of you, early on, for me, it was physically writing it down on a piece of paper. That was the plan, right? And that's it. But I would definitely do this. Now, I talked about, this was 2 months ago, we talked about establishing a trading plan for wedges. I would go back and watch that if you haven't, or if you're interested. Still applies today. Same thing. Nothing's changed there whatsoever. But this is part of my own trading journal, just to see like, okay, what am I looking at? What do I want to see? What do I want to do in the breakout trade? Where do I want to add? What is our ideal scenario, right? We'd also talked about this many months ago. The pitfalls that people get into and how they lose money in a bull market. Especially, the number one thing is like revenge trading, either shorting the breakout or just FOMO chasing with max leverage, and then you get margin called. Both of those come down to overtrading, not understanding allocation buckets. Like, if you want to get margin called on your YOLO stack every day, that's up to you, but I would keep that sizing very low, right? I don't gamble on sports, but some people do, and I wouldn't want to gamble my entire life savings on every outcome, right? So I would size that down if you want to do that stuff, or if you're not good at it, or you're still learning, size it down. Another thing I already see people doing is they're looking for the catch-up trade already, while the active winning trade is still winning and has been winning for a long time. And again, that goes back to not having a plan, lacking conviction, unit bias, classic alt mentality type stuff. And I've also done plenty of videos on this in various different ways over the past couple months. I'll put the playlist description in the link to this video. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PVI, DBA, Kraken. So at this point, if you've sort of missed or screwed up the Bitcoin side of things, I think it's okay to look at a few other things. I wouldn't go way down this list. That's just me. I wouldn't go way down this list thinking, oh man, ApeCoin, that was up 60% last week. Got to look for a trade there. Mask is up 30%, whatever that is, right? I have no idea. But I would lean on the TA. I would lean on things you're familiar with and not just FOMO everything into whatever, unless that's your FOMO bucket, right? If it's your FOMO bucket, FOMO all over that. FOMO all over it. Not investment advice. But if that's what you want to do, go for it. I just wouldn't send your whole account into one meme coin that's been around for a day. I would still go through the motions and establish the trading plan across the board. I'll talk about memes and Doge a little bit today as well, but Doge has done very well over the past couple days, and we talked about it. We mapped it out. At this point, it's like you sort of missed it, but I don't know where this goes. This might go very high. I don't know, right? It's done very well recently, and the cycle means this could go, I don't know, 50 cents, right? Let's just pick a number. So if you think it's going to 50 cents, then what are you doing here? You're buying dips, you're waiting for pullbacks, and you're probably DCAing a little bit. So I would take the multi-time frame approach. Think about where we're at in the cycle. This is based on where you personally think prices may go in general for whatever reason, right? Is this an election effect? Is this Trump versus Harris? Is this Elon? If Trump loses, then what happens to this? I would game all of that out. But the market's clearly sending a signal here that it thinks it knows the answer, right? It thinks it knows what's going to happen next week. So some of this stuff has looked very, 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 very strong. On the Bitcoin side, the number one thing I use for both trailing stop losses and trailing limit entries is Williams Fractals. You just type in WF if you're under Kraken here. Click indicators, WF. It's the first one that pops up. If you get a low, high, low candle pattern, you get a resistance fractal. If you get a high, low, high, you get a support fractal. In an uptrending market, support fractals are trailing stop losses. You should not be making lower lows based on those support fractals. You can see how infrequently these happen on the daily. You should not be seeing these on any chart on every other candle. Even this is an oversampling of what you usually see because we've been ranging. So once we get out of the range, we should see far fewer Williams fractals just in general. But on the top side, you can also use those in this situation as an entry. And it's kind of telling you what you already know in that anytime we breach a high, you're adding. So this goes back to, here's the pattern. Let's map out an idea. I have X% of capital for this pattern. Maybe it's the entirety of my swing trading account. Okay. If I'm unit sizing this, what do I want on the breakout? What do I want on any confirmation? And then what do I want to use on any fractal breach, right? Let's say the initial is, like I'd mapped out for the Solana trade, the initial is some amount that we're adding a little bit less probably on the way up. But as we get confirmation, we're adding more. And even past this for Solana, as an example, you're getting more confirmations to continue to add if you weren't already all the way in or whatever, right? Depending on your unit sizing, percentage move sizing, whatever you want to think about that as. So at this point, you'd have the breakout, you'd have the Williams fractal, and ideally you're probably over 50% of some sort of swing trading bucket into this trade. You of course have to keep in mind we've got event risk coming up, we've got the election, you've got some jobs numbers at the end of the week, you've got a Fed meeting the week from today, right, on the 7th. So there are some volatility events where you could get an entry if you feel the FOMO here and you feel like you're not fully where you want to be, right? But I would keep those viewpoints in mind. Here's where I think we're going. Here's where we are. This is the risk reward. Is this bullish or bearish? If you think this is bearish, great, short it, right? But that's not what the trend says. That's not what the Williams fractals say. That's not what the Bollinger Bands are telling you. Bollinger Bands are giving you a breakout for the first time since before May, right? We haven't been above the top of the Bollinger Bands since May. So kind of no matter how you slice this, it's harder and harder to ignore the bullishness here. But hey, if shorting is part of your plan, go for it, right? I'm not going to stop you. The other thing is the trend channel and the pitchfork What is the risk reward here? It's still decent, I think, for plenty higher. But this comes back to learning how to trade. It's what do I do on a breakout? What have I done on breakouts before? What did I do right? What did I do wrong? And establishing that muscle memory for success. I thought it'd be interesting to talk about this meme coin portfolio. I haven't talked about it in a long time. It's almost at the end of its DCA plan. I'll get to that in a second. But alt's clearly not the move broadly. And many people have talked about this for a long time. But we started talking about this, I think, in April of this year. What did we want to see? We wanted to see a variety of things, including rates coming down, including outperformance relative to the majors. And we talked about and discussed a DCA plan. And that plan was basically weekly. We were going to DCA into some stuff, collect yield on the cash. And then ideally by the end of the year, we're fully ready to go. Based on how that's played out, it's kind of what you'd expect in that it's underperformed mostly as a group. I don't have the hard numbers on this, but BTC there in the white, BTC has outperformed almost everything. Doge just catching up this week. Pepe has done well just based on timing, but most of this other stuff, 80% of it has underperformed BTC. Some of this is going to zero, like Bowden's probably going to zero, and that's okay. We knew that going in, and some of this was going to go to zero. But that's why we didn't lump sum it in May and April when a lot of people were all bowled up on meme coins, right? And even here, still, you're sitting on 20%. Let's say you started with, I don't know, $1,000, and this is a strategy. You're still sitting on 20% of that in cash, even here, and that starts to ramp up towards the end of the year. And based on the timing, that could work out, because what do we know? We know that eventually alts start to outperform late in the cycle, probably into 2025. So by the time 2025 rolls around, ideally we are fully allocated. We feel good about it. We spent time doing it. We allocated in the downtrend period. We underperformed BTC, but hopefully we begin to outperform BTC eventually. That's the goal. But this was just an example of a plan, hypothetical, that you could go forward on your favorite 10 coins or something. That way you're not hyper-focused on the day-to-day changes and you're still in the market in a sense. You're taking one less decision over multiple months because you're just on autopilot. So if you don't have a plan, write it down, make your buckets. If you don't like the cash bucket, that's fine. If you don't like the YOLO bucket, that's fine. If you don't like trading at all, that's fine. But you have to discover that for yourself and figure it out. That way, when you see stuff happening, you're not in this panicked state making very poor decisions based on heightened emotions. That's the last thing you want to be doing. So keep a level head and things look good, right? Like, dislike, comment, share, subscribe. That's all I got for this one today. And happy trading.